Do you know whether your Christmas tree farm is considered a hobby or a business? I'm Andrew Bosserman, a CPA that helps Christmas tree growers and forest landowners save taxes. And in this video, I'm going to explain about the IRS hobby loss rule. I get a number of common questions from Christmas tree growers about the hobby loss rule. And the questions normally go something like, am I allowed to deduct a loss from my Christmas tree farm on my taxes? Or I've heard about the hobby loss rule. Does that affect me? Or, my tax preparer is telling me I'm showing a loss too many years in a row and I'm going to get audited. So let me go over all of these things in this video just so you have a better idea of the answers to those questions and the hobby loss rule. So generally, the hobby loss rule is in section 183 of the Internal Revenue Code and essentially says that you're not allowed to deduct a loss from an activity that's considered a hobby. But you are allowed to deduct a loss subject to other possible limitations if you are a business. So a business is an activity that generates income and that you've entered into primarily for profit. Now, you don't have to necessarily generate income every year, as I'll talk about, especially in the startup phase, but your main reason for entering into the activity, such as starting your Christmas tree farm, must be that you're trying to make a profit. So make money and make a profit overall. Whereas a hobby, you've entered primarily into that activity for some elements of personal pleasure or recreation. Your main motive isn't making money. And the IRS has said that if you show a profit 3 out of 5 years in an activity, the IRS just presumes you're a business. So if you can show a profit 3 out of 5 years, no problem. You don't have to worry about the hobby loss rule. But this rule often affects startup Christmas tree growers. If you're starting from scratch or, taking over a young farm, then you're likely going to show losses for more than the first 3 years because it takes 7, 8 or more years to grow your first crop of saleable mature trees. However, all is not lost. That 3 out of 5 years is just a presumption, meaning you can show the IRS based on your facts and circumstances that you are running your Christmas tree farm like a business. It is a business because you intend to make a profit. And the IRS, in some regulations they issued, goes through 9 factors that the IRS looks at when making this hobby or business determination. Now, I'm not going to go through all of the factors in this video, but I do have an article on my website that goes through each of them in detail and links to the law so you can read it for yourself. But some of the factors are things like, hey, do you run your Christmas tree farm like a business? Do you have a separate legal entity? Do you maintain a separate bank account, separate books and records? Just think about what you would consider a normal business should do, and you should do all of those things. Another factor is, do you have expertise in growing Christmas trees, or have you consulted experts? So a lot of Christmas tree growers, when they start out, and they may have some expertise because they grew up on the Christmas tree farm or have been involved in other similar activities. But if not, no worries. You can go to your state Christmas tree association meetings. You can read books. You can talk with other growers. So that factor's normally pretty easy to meet. Another factor is how much time and effort do you spend on your Christmas tree farm. The more time and effort you put into the activity, the more likely the IRS is going to, look at it and, it shows you're trying to make a profit if you spend lots of time and money. Another extremely important factor is having financial projections that show you're eventually going to make a profit over time. So if you can show the IRS, hey, I have a business plan, the first 7 or 8 years, I'm going to show some losses because I'm just starting out and I'm not able to sell trees yet. That should help because the IRS will see they are intending to make a profit. This is just a much longer startup period than a traditional business. And there's a number of other factors. Those are the main ones. But another thing I normally recommend beginning Christmas tree growers do is to try and bring in income any way you can. So that could be selling pre-cut trees you purchase from another grower just to get customers used to coming out to your farm. That's if you're a choose and cut farm. Or it could be raising other crops. I've heard of other Christmas tree growers growing pumpkins or having a corn maze, um, or possibly having some sort of fall festival or doing things, some sort of spring activities for families. There's lots of options, especially if you're a choose and cut farm, to try and bring money in to show the IRS you're generating some income, you're trying to make a profit while you're waiting for your own trees on the farm to mature until you can sell them. So I hope this helped explain a little bit more about the hobby loss rule. Don't worry if you're showing losses. A lot of times you are still able to deduct them so long as you can support that you're in business and have started your business. But feel free to reach out to me with any questions. I'm always happy to talk with Christmas tree growers about Christmas tree tax issues. And I'll link to that article that goes more in detail about all of the hobby loss factors so you can look at those for yourself.